This is Joshua Hayes from BigWaveTrading.com and BigWaveTrading.net coming to you with a special stock market wrap-up because of one reason. Very oddly tonight, which I can go ahead and do this. Last night, I didn't get a chance to write down all the reasons to go long stocks. And let me tell you something. If you lived my life and if you did everything I did by yourself, basically, on your own on your website and tried to have a girlfriend, the chances are you're going to be pretty single. And right now, I'm headed down that road. So I'd like to keep something simple here, and what I want to do is just go over the NASDAQ and some of the other indexes that we pointed out yesterday. Now, one of the things that I can't even type it right. One of the things that I showed that I was really favorable on was that the NASDAQ had a very bullish, let's say, there was day 2 on low volume, day 3 on below average volume. Day 3, oh my gosh, look at it crush on 2.31% volume, and there being no volume once again. And it was the same way as the previous 3.35% crash on no volume the day before. That was our hint that maybe there is just some severe extreme selling in indexes that people have to get rid of. And that right there then led to this on the NASDAQ. We had an immediate nice day. Day 1 of a technical fall through attempt. We hold on to those lows. Day 2 of a technical fall through attempt. Then we have a nice little candlestick chart where it looks like it's closing up at the upper end of the range, which it is, after having a good session, after closing at the low end. So it appears that the market is trying to find out a bottom here. But there was no way to prove it until you got your fourth distribution, your fourth accumulation day. There it is. There's day 1 of the down day. There's day 2 where the downtrend stops and it says, oh great, now I'm off my feet. Then there's the day 2. There would have been day 3, and technically, yeah, you could go long stocks if they're nice and strong, but I had to wait for this day. And if you don't think it's a very strong day, 1793.21 is the high. 1793.21 is the high. So 1793.21, 1793.21. That all looks really good to me, and that's why you saw the NASDAQ jump up 4%, and it looks like it is the leading index. Here is a long-term chart of the index to show you that things have been coming quite into normal, even though some other people say that it's clearly, that's so obvious you can clearly see it. I don't need you. That's fine. Go ahead. Think that way. New York Stock Exchange, same way, same kind of tracking. Had some distribution on its way down. Didn't make me feel too comfortable. I mean, we did crack the 5200-day moving average on 622. We did on lower volume, just like the NASDAQ and the New York Stock Exchange. But for some odd reason, this breakdown looked a little bit harsher, and I think that's because it went below the 50, and it became, actually, as you can see right here, inches off the 200-day moving average, which is always a no-no. However, right after that, flattened out. Right after that, flattened out and moved up well off the 200-day moving average. That's the second day of a rally attempt. Third day of a rally attempt. Look at the volume. Oh, didn't mean to do that. Higher than the day before. The volume is temporarily. And also, here's the down day, the down destruction day that kind of killed the rally attempt. 1, 2, 3 days. That's 3 accumulation days on the way up. Things aren't looking as ugly as they were because that was in June 9th. So now as we go along, we get to see the New York Stock Exchange, crush. Great. That's great. Let me go, I guess, to the NASDAQ. I guess the telecharts will be happy to show it fall on the NASDAQ. And so then as you can see on the well, I'm not quite sure what's going on in the NASDAQ, but here, let me see if I can't do this. I don't know what's going on. How disappointing. There we go. So as you can see on the NASDAQ, doing really good. I want to show you the New York Stock Exchange. Remember, after it got beat up so badly that it looked like that it was in trouble for a while, look at the NYSE, bounced right off the 200-day moving average, breaking out above the 50-day moving average. Doesn't it look like, hey, I'm ready to make more gains? I don't care if I got sucker punched in the face or not. I'm going to go higher. So whenever it says that, I think you got to have a little bit of ruling faith in the stock market, saying that, you know, you can beat me and terrify me and knock me down a lot, but at least at the end of the day, there's always going to be one person standing. Here is the index I was the most bullish about until after April. From the April, let me go ahead and get this right so you guys can see it just correctly. Oh my God. Oh God. So let me go ahead and undo what I did. I'm sorry about that. Edit. What did I just do? Oh, I'm not too smart, guys. I believe that's a Bollinger Band, but I got to get rid of it. Yes, I do. So what was happening is that we had the rally rising on low volume, not a whole lot of anything, but as you can see, the uptrend line to the stock market was nice in there in March. You can see that this uptrend line, if you wanted to use, was nice in there. If you then figured it needed a pullback, a time to rest, that's fine. But then look, it was soon forming another nice uptrend line. Looked like, you know, it was getting its back act together, I guess, overall. The individual that was trading this. But then as you go along, you keep hearing more and more problems about this same individual. And then after this crack, which has now turned into the real follow-through day, it appeared that this is when Lunatic around 622, so actually it was a week before, 622, as you can see on that down dive, on that little volume, on a 3.306%, instead of having sense and being able to tell where's volume there on the 50-day volume average, why is it so low? Didn't we do this in 2001? He went crazy and sadly, you know, hurt a lot of people. It's very sad, but this is what the New York Stock Exchange, this is what the S&P 500 is. It's in a bullish uptrend above the 50-day moving average. This is what the New York Stock Exchange is. This is what the NASDAQ is, especially with it looking very good recently. I mean, it's got a lot of nice stocks in there. As you can see, it's coming in now. And now the S&P 600, as you can see, it's retaking its 600-day moving average. Looks like it's making a nice little flower garden on the way to the top. So overall, let me see the Russell 600, which I don't look at a whole lot because it basically mirrors the 2000. So there's no reason to fall in love with it since it mirrors it so well. Big deal. So I screwed it up. S&P. Oh God, I'll get it right. Oh my God. SML dash SMLX dash O. How did I forget it? SML dash X. So there's what it is. SML dash X. SML dash X. 3.67% gain. Nice strong move. Look at the past 3 days off the lows. 7.271%. Look at the NASDAQ off the last 3 days of the lows that I want to show you that it hasn't been as crazy, but it's been very strong. 6.09%. Show you the New York Stock Exchange. It's been very strong also, but we can't say that it has been, you know, strong as the rest of the index. You still got a nice 6.50% gain. Still nice coming off the 200-day moving average. And then, of course, the most stressful of all the indexes out there, just by the way it's acting overall, the S&P 500. And as you can see, it's up 6%, so not that bad. If I could go ahead and show up the IBD charts and not get away with it, I would love to do it. But let's just say that the SML-X chart is about as close as you... I wonder why this doesn't work. SML dash X. Maybe it's dash dash X. There we go. So I'm going to see why a stock that's up at 3%, 7.21% is not as much up as NASDAQ stock 6%. Now, if we have stocks in there, which I haven't seen, so this is a new one for you, could be a loss for me. Kong. I reloaded back up on Kong. Back here, got some more of the surgery. You know, and as it goes along, it hasn't done much, but still, look at the nice, you know, trend it's in. That's almost up 1%. Not as good as the market, but overall, it'll probably attack a lot better. And don't forget, while you're sleeping well with your 107% gain on margin for the past 1, 2, 3.5 months, I've been sleeping on about 105% of Michael Jordan's margin. So I'm going to go ahead and wrap up part 1 there.